All right, guys, what's going on? So I basically just created this document with basic terms, and I wanted you to have this for a reference point. I am going to refer a site where you can get more clarity on what these are if you don't understand what I'm talking about, but you definitely need to know what these are. So one is basically just what is a pip, and in short terms of what this is saying is basically just it's a move in the market. Every time the market moves, it moves by points. In Forex, we call them pips. So it's kind of like a little Forex slang. Now, there are other things called like a pipette and more, but we're just going to stick with pips because essentially that's what I'm going to be teaching you how to earn. Again, you want to earn pips. You don't want to lose pips, even though that may happen, but the goal is to earn pips. The next thing is the leverage. And once you open your real trading accounts, leverage is going to be something that is important. And because it costs so much to actually be invested into the Forex world, retail trading, which was, the best thing that ever happened, allowed us to have basically some leverage from our brokers where they're fronting the money in order for us to be able to trade with our tiny little lot sizes, which is going to be the next thing that we're going to go over. So if you are trading, when you open your account, you want to make sure that you select the highest lot size. So you may see like 1 to 20, 1 to 50, 1 to 200, 1 to 500. I would say as a beginner, you want to select the highest leverage, which basically means it's the less money that you are going to have to front per trade because your broker is going to cover that. Now, they will charge you something called either a swap or a commission for basically fronting that money for you. And it's a percentage of whatever risk you have and how long you've held the trade. You do want to review that on your broker, which I'm going to recommend. But typically on their FAQ sheet, they'll let you know what their fees are. Sometimes there are fees for holding trades over the weekend or overnight. So again, they're usually very small fees until you start trading like majorly and using higher leverage. Okay, moving along, what is a lot size? So this is very important when you're using a lot size with the Forex market, and I'm not talking about metals, I'm not talking about commodities, I'm talking about just currency pairs, which we're going to discuss. They're basically a unit. And again, I have the definition here. I'm just going to explain to you in simple terms because you guys know how I am. So typically we have micro, minis, and standards. And a micro is basically 0.01. And a 0.01, even though it looks like a penny from how we've been accustomed to learning, it's not. It's actually 10 cents. So if you were to win 20 pips with a 0.01, you would earn $2. If you were to win 40 pips with a 0.01, you would win $4. Same thing with 60 pips, you would win $6, excuse me. This is the same thing if you were to lose. If you lost 20 pips, you would lose $2. If you lost 40, you would lose $4. If you lost 60 pips, you would lose $6 using a 0.01. Now this can keep on going. This just gave random numbers, but you can do 0.01, 02, 03, 04, 05, 06, 07, 08, 09. Then after 0.09, the next is called a mini. And this looks like 10 cents in the regular US dollar currency. It's not. This is actually equivalent to $1 per pip. So $1 for every move in the market. So if you were to win 20 pips, you would win $20 using a 0.10 because it's $1 per pip. Same thing with 40 and 60. And this would be if you lost as well, okay? And this shows you with $2 per pip, $3 per pip. So it's just showing you how that would work. The next is the standard. And the standard is definitely for the more advanced students. I would recommend waiting until you have consistency with your trading before you go to this level. You want to make sure you have a certain account size, and you also want to make sure you understand the importance of risk management, which we will discuss later on in this course. So what looks like $1 is actually $10 per pip. So $10 for every move. So if you were to win 20 pips, you would win $200. If you were to win 40 pips, you would win $400, and so on. Understand that this also works if you were to lose a trade. So, and I say this because we're going to win and we're going to lose, and you have to be willing to accept the loss. So if you lose 20 pips, you would lose $200, lose 400, lose 600, depending on this. There's no reason why you should have a 60 pip stop loss, which is something that we're going to get into shortly. But this you can use as a reference point so you can understand. You're going to have to help see things a little bit differently than what you're used to and what you grew up on, because what would look like 10 cents is actually a dollar, which looks like a penny is actually 10 cents. And what looks like a dollar is actually $10. So you want to get used to that. Post this somewhere, print it out, put it next to your computer, just so you make sure you don't make that mistake. The next thing is, what are currency pairs? And it's basically a quotation of two different currencies. So sometimes you'll see us say, oh, we traded EU, UJ, GU, or things like that. And what that means is the currency on the left-hand side, okay, is we're trading this against this one right here. So JPY is the Japanese yen, USD is US dollar, GBP is the British pound, Aussie, and so on, and Swiss franc, and so on and so on, so on. So if the currency is on the left side, that's the currency that we're going to be trading on based on its strength against the currency on the right side. So if the British pound is stronger than the US dollar, we'll be looking for buy opportunities. If the British pound is weaker than the US dollar, we'll be looking for sell opportunities, and vice versa. So the top 5 most traded currencies are the US dollar, the euro, the Japanese yen, the British pound, and the Aussie dollar. There are a ton more currencies. There's also exotic pairs. Right now, again, this is a basic course, so we're focusing on the basics, and trust me, you can make money with these. Now, lastly, we're going to talk about brokers. So brokers are the firms that provide traders with the access to a platform that allows them to buy and sell currencies. Okay, so we love them. I have included 2 brokers that I personally like a lot. FX Choice is regulated. I don't like US brokers personally, like Oanda. They have a lot of candlestick manipulations, and their leverage is horrible. So I don't personally recommend it. But if it's something that you want to do, I totally understand. FX Choice, I've been with them for almost 3 years now. Their withdrawal and deposit process is very simple. Hugo's Way is also another one, but they are not regulated. However, I have not had any issues with deposits or withdrawals. The customer service has been amazing. I am in the process of working another relationship with another broker that I've heard really good reviews on. So once I get some clarification on some things, I am going to refer that as well. Now, if you're here to trade some stocks, I actually found a really cool website or blog that explains, that gives a list of some brokers, and it explains their fees and things like that for you to look at. So that's something, again, that you can research. I do have a student that is currently using Charles Schwab, and they just found out that Charles Schwab actually has an intraday trading platform. So, and she's doing exceptionally well. So I just wanted to make that clear. I don't make any money off of Charles Schwab, but I'm just letting you guys know. So these are the basic terms. As far as other terms, I'm going to go over them in the videos and actually show you some examples instead of just giving you like a dictionary definition. But please make sure you save this, you print this, whatever. Just keep this close to you if you're a newbie. It's going to help you out a ton. Have a good one.